Hello, 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 and good afternoon from London. It's just gone 1 p.m. here, and it is the 20th of November. I'm joined by our global market strategist, Ben Laidler. Ben, how are you?
Yeah, all good. I was just wondering if I could do London as well as you did it.
Almost, almost. Karim, I'm guessing you're saying hi because you can hear us, but that is my next question for everyone. Let me know if you can hear and see okay. Neil, as usual, coming in with the W. Um, the Daily Voice, bottom right, as you see it, for any traders out there or anyone that wants an update really on markets on a daily basis, you'll be able to get that on wherever you get your podcasts. That's something Ben has been doing for the last week or so. Let's get into it this week. Remember, any questions, feel free to pop them in the chat, whether it just be a chart that you want looked at, we can do so at the end of the week. I love sitting here on a Monday when all I can see is green, other than obviously the Hang Seng there year to date. But what a week! Green everywhere. Let's have a quick look at the S&P, which finished up just over 2%, making that a 6.86% month, and year to date nearly 18%, sitting at 17.5. Broke the trend line last week and continue to push on, albeit the last sort of 4 trading days, including today, it hasn't done too much, but that's fine. You can see we're back to the September high. So it is a hurdle that, it's got a little bit to go. But I mean, bullish investors are super happy. The next real big level above literally where we're trading now, of course, takes us year to date up to 4,600. That will be the next area to consider. But bulls have got to be happy. They really do. And I'd argue they're happy as long as it stays above 4,400, which is obviously considerably lower than where we are right now. Just quickly to have a look at the NASDAQ. And if anyone wants a further look later on, we can absolutely do that. The reason I just want to bring that in, one, because we briefly made a new high for the year last week, but also just to bring in, even if we do close above that previous high that we had from 20th of July, and then obviously last week, you do have the high from January last year, just to keep an eye on. A lot of resistance around there, but another great push. Look at this as well, by the way. Breaks the trend line we had on, finds support up to the next level, pushes up that to the next one. Oh, it's dreamy. Ben, summarized last week for us. It looks good on paper anyway.
Yeah, and it was pretty good in reality as well, right? I mean, markets pushed on, but for the third week, I think what was most interesting though was the rally really broadened out,
Mm.
right? It's been very tech led for the first couple of weeks, but last week we saw it really sort of broaden out to these more depressed, these more cyclical, these more stressed sort of bits of the market, including the overseas markets. The DAX went up nearly 5%. Even the poor old FTSE managed to have a week in green. So that broadening out, very very healthy. And what drove that was this below consensus U.S. inflation number. Right, we're down at 3.3%. Headline number really cooled down. This combination of lower gasoline prices, lower housing prices. Another sort of big step in the right direction. We're still, a long way to go, right, to get back towards 2%. But just real boost to the bulls, and myself included, who think that the Fed's going to be cutting. If we keep this up, the Fed's going to be cutting by the middle of next year.
Mm-hmm.
Obviously, the flip side of that, bond yields came down. The 10-year, right, which was flirting up at 5% just a few weeks ago, fell under 4.5%. That clearly helps valuations. The dollar lost a lot of support, fell back. It's been that sort of safe haven supported by high bond yields. And oil prices, briefly went under sort of $80. So that sort of vice that we were talking about a few weeks ago of high bond yields, high oil prices, really just continuing to sort of loosen off and letting the market sort of push higher. More good news. We've avoided a US government shutdown, at least until January, when we get to do all this again for the third time. Xi and Biden seem to at least not make things worse, which I guess is, less bad news is good news at this point. And we had retail earnings, which were a bit of a mixed bag. I think overall they were pretty good. Target, Home Depot, I guess Walmart sort of wrecked the party a little bit by just warning that there's quite a lot of deflation coming through, that and obviously given who they primarily sell to, which is the lower end of consumer, are they the sort of canary in the coal mine of the weakening consumer? Just as you're beginning to sort of feel a little bit warm and fuzzier about China, of course, Alibaba then comes and sort of wrecks that party as well by rolling back its sort of cloud sort of breakup. And then just when we were sort of easing into a nice quiet weekend, OpenAI fires its CEO, and we have all that sort of shenanigans going on over the weekend, which is quite important, I think, because AI has been a big driver of this sort of Magnificent Seven sort of tech rally, and anything that sort of disturbs that potentially sort of undermines one of the big foundations of the rally we've seen this year. But, it all looks like it's ending out reasonably well with Sam Altman going to Microsoft. That's it.
Yeah, what a weekend. Let's have a quick look at some of those stocks mentioned there. Alibaba. I think for anyone that remembers, probably a month or so ago, we were looking at the chart. It's a regular, and we were just looking at something like this. So when it would have been back in September, a couple of months ago, and it was getting squeezed both ways. Obviously, the bulls want to see it break to the upside. The bears or anyone short would want to see it break to the downside. Fairly well respected. You can see here found support again in that middle part of September. However, obviously for the bears they won, for the bulls they lost, and actually then respected it quite well as resistance. And we've gone down to find support where we had a push higher in May. We're sort of clinging on to that now. Let me just get rid of these arrows for now. So I guess the next sort of area below here would be back down to what was the low for March 2022, in an area where we pushed higher this sort of time last year, a little bit below this. But it still seems as though the bears are in control of this level, I have to say. The next one to have a quick look at, Target, which pushed higher as the comment says there, the back end of last week following their earnings. This is a weekly chart. Obviously, it's another one where it had been struggling for some time, pushed lower, and actually had fairly well respected its range from June to when it did break lower in May this year. So June last year, fairly well respected, comes lower, finds resistance. However, can we push on today or this week, I should say, will be the most interesting part. You can see, obviously, we're trading up at 129 now. This time last week, we were trading, below 110. So decent push higher. However, there are still a couple of real big hurdles for us to get through from the bullish perspective. Above 138, I really would like it. You could argue the fact that we're trading above, 124, 121 is obviously pretty good too. But that shows what can happen after, a good earnings report or good news, for example, as you're seeing there. So overall, look, good week. And as Ben mentioned, the FTSE is green week, green month, green year to date. We'll have a little look at oil later. We'll have a look at gold as well. We can even bring in the Dixie too. But positive week for markets. We'll talk about what's coming up this week shortly. But before we get to that, we'll talk about the hot topics. And as usual, you can find this all on eToro Plus on the website, which I'll post the link. But let's have a quick look through these, Ben.
Yeah, so I guess we laid out our equity stocks view for 2024, which is, it's reasonably bullish. For anyone that listens to this call, shouldn't be too surprised by. We're looking for rate cuts, and we're looking for a return to sort of double-digit earnings growth. I think those are the two sort of big drivers. How we get there, I think, is this soft economic landing with inflation coming back into that sort of rate cutting zone between 2 to 3% by early next year. What stops it from getting worse is these still reasonably firm labor markets and these central bank puts that are out there. So if I'm wrong, we get a harder landing. I think central banks are now in a position to sort of start cutting interest rates. I think the I think the rotation call, the style call, the sector call is actually a bigger call next year than the overall markets call. When do you get out of these sort of teddy bear big tech stocks, right, that have some growth but are also very defensive and have worked so well this year? When do you swap those for the cheaper, more cyclical, more global sectors and markets? So things like small cap, things like banks, things like real estate, and I guess the sort of country equivalent of that, which is basically Europe and EM. When do you sort of rotate into that out of the US and tech? I think you do it at some point next year, just not quite yet. I think we want to get closer to those rate cuts. We want more visibility. We want a bit more slowing of the economy. So give it 3, 4, 5 months, but I think that's going to be the big switch for next year. And I think you got a little sense of that last week when we had that below consensus inflation number. What rallied dramatically in your face? It was basically all these things. So that was, I think, a little bit of a prelude. I think it's a bit early, but I think that's the big story for next year. We've also written a little bit about how sort of Santa's come early this year, which is just revisiting this sort of strong November to 7 seasonality. We've obviously been very strong in the last sort of few weeks, just running through why this easing of this oil and bond yield vice, plus these very strong technicals, right? Bearish investors, strong seasonality, buybacks restarting. We've talked a lot about just Magnificent Seven versus the rest. So Magnificent Seven big tech stocks up 70% this year. The S&P 493, all the others up about 15. So it's really been a sort of one-legged stool very much this year. And I think that can certainly continue in the short term, right? It's where all the growth is. And you've got these very defensive businesses with lots of cash and everything else. So, normally you've got to pay a lot more for that. And normally you don't get the two together, but you do right now. And I think that explains a lot of this sort of Magnificent Seven rally. We've got COP28 coming up, which is the big UN annual climate conference, when I would expect a lot more sort of recommitments and raised targets, especially for solar, wind adoption. And this may just shine a light, I think, on what's been one of the biggest disappointments of the year on the stock side, which is how badly a lot of these renewable stocks have done. The impact of higher interest rates, primarily competition from big oil, whatever it may be, they perform appallingly, but it has completely turned around the valuation. So I just wonder whether the outlook for lower interest rates, these lower valuations, and COP28 maybe just shining a light again on just how strong that long-term growth outlook, is, maybe begins to get them trading a little bit better. And then you can just see the chart at the bottom, just flagging one of the risks for next year, which is this chock-a-block full of elections.
Yeah.
And it's really bookended by the most important ones. So January 13th in Taiwan, there is the DPP, who are basically the sort of independents leaning incumbents who the Chinese refuse to talk to, are leading in the polls. The opposition have until Friday to come up with a consolidated ticket, and if they can, they basically win the election, which would basically take, I think, Chinese tensions down, a number of notches. So that, is a pivotal election, which basically gets decided this Friday. And then at the other end, you also have the US election, which looks like a rerun of last year, which is depressing. That's the best that the US electorate can come up with, is 2 octogenarians. But that's where we are. We have a little bit of time to think about that. But, just a lot. I think by some estimates, 40 to 50% of global GDP is voting for new presidents or prime ministers sort of next year. And as we've seen this year in Argentina over the weekend and Poland a few weeks before that, it can really move markets.
Yeah. That obviously all kicks off next year. You see some of those dates. I was doing a bit of research as well for next year, and the striking amount of elections is crazy. Really, really big year for elections there. We've already got a couple of questions in the chat for specific charts. Feel free to put them in as well. Stefan, if I could just ask you to pop that question in the Q&A, just so I don't forget to go through it. eToro Plus, the link is in the chat, but do remember you can find all that here, and you can click the Analyst Weekly, for example, and that will bring up bits and pieces of what we've talked about today. You can scroll down as well and see all of that in detail and the related articles. Remember, on the education, you've got Digest and Invest, you've got the latest retail investor beat, all the latest news and news analysis, and obviously eToro Academy as well. Okay, let's get on to the week ahead. I guess the first point to mention, whether you're an investor or a trader, is the volume is likely to be lower this week. And in fact, I think, from, looking at the quietest weeks from a volume period over the year, I think this is up there as being one of the quietest, along with your sort of time around Easter, between Christmas and New Year, back end of August. But we've still got a 1 to 4. So let's go for it.
Yeah, so that US Thanksgiving holiday is basically equivalent, if not more important, for Christmas if you're American. So yeah, a lot of people will just take the week off. So yes, less volume, but B, I think importantly for us to invest in stocks, it's the first big Christmas test.
Yes.
And we've talked quite a lot about the consumer over the last few weeks, how important they are for the economy, et cetera, et cetera. So the US consumer is probably going to spend $1 trillion on Christmas gifts over the next month or two, which is sort of bonkers when you think about it. But, Black Friday, Cyber Monday is the kickoff. And so, come Monday, I think we're going to get a real sense as to how those sort of sales went. If they went well, great. If they didn't, then, a lot of these retailers are going to be stuck with having to mark down inventory and, have a sucky fourth quarter. So let's keep an eye on that. We've got Nvidia reporting this week. This is really the last of the sort of big earnings reports. And, we're going to end with a bang, right? I mean, it's been the sort of poster child for the semis and AI boom. We've obviously had a bit of AI drama over the weekend. But, they're saying they're going to post something like 16 billion of sales, which is going to be up something like 170% year over year. If you want to justify the AI boom, their earnings will be up something like 400% year over year. The stock's up 230, so the stock's become actually a lot cheaper this year, which is just sort of interesting. So the AI hype is definitely becoming the AI reality. We have a few more. We have Lowe's, we have Deere, we have Neo. So plenty to watch there. Politics, plenty of politics. We have Malay, sort of a narco-capitalist outsider initially, but winning in Argentina, which I think just tells you how bad things are in Argentina, that he easily won that election, and now they're basically faced with a little bit more pain as they have to slash the budget, move towards dollarization. But, we'll see with time whether it helps get them back on track. We've got a Dutch election on Wednesday. We have UK budget also sort of on Wednesday, so plenty of stuff going on. And then on the data side, we're going to jam it all in mostly before Thanksgiving, but we've got the FOMC and ECB meeting minutes when they were both on hold. Be interesting to see because, since then, bond yields have collapsed and financial conditions loosened off probably a little bit too quickly. So we'll see if they respond to that at all in the minutes. We've got flash PMIs on Thursday, which will tell us a lot about how quickly the global growth and inflation is slowing. And Europe will be the poster child for that. That's where growth and inflation are already the lowest. And then on Sunday, we have an OPEC meeting, which, until a few weeks ago was basically a non-event. But now with OPEC, with oil prices sort of flirting with $80, there's a lot of talk that they may have to put more cuts sort of back in to try and support oil prices. So quite weak in the US, but feels pretty busy everywhere else.
Yeah, it does. It really does. Absolutely. But yeah, that Thursday going to be very quiet, and obviously most people are going to take the Friday off in the trading world. Just have a quick look just at those earnings that are coming out this week. Some of those names we've already mentioned there, but I suppose people might be keeping an eye on Zoom as well, which we can have a little look at shortly. I mean, that's near its all-time low at the moment. Quick sort of squint look at the S&P 500 earnings day performance. Still more green, isn't it? But however, just as a reminder, if you miss your earnings, you can get punished quite severely, as Tesla, Google, Walmart, and Oracle found out there, and Cisco as well. Let's have a quick look then at some of those companies that are reporting this week. We'll start off with Nvidia, which is always a popular one on this call and for people on eToro, and it's heading into the reports. let's just have a quick look here. Pretty much on its all-time high, which obviously for longer-term investors or investors that literally got in the beginning of the year, they're very happy. You could argue though, and people will do that from June. It's been in a bit of a range, quite clear support down the bottom. We've now hit the top of it. Good earnings report sees us break above it. A bad one, what you probably would say is if it kind of meets expectations or is a little bit worse, since the beginning of the month, it's only gone higher. So you could argue a lot of that has also been priced in maybe for a good earnings report. So be a little bit careful about jumping the gun here. But yeah, interesting to see whether it can break out the top end of that range and make a new all-time high. They report after the close on Tuesday, so that would be roughly about just after 9 p.m. for those that are in UK. Let's have a quick look at low, which is a little bit flat pre-market, nothing too crazy going on. Quite an interesting chart. You can see back ends of September, it broke a trend line, as many stocks did actually, where the trend line would have started with the COVID low. That broke and gave way, and we almost made it back down to support from what would have been pretty much a year ago, October, but a very key level nonetheless. You can see historically has found either resistance or support. We didn't quite make the way down to there. However, I would just be a little bit cautious again if you're more of the short-term trading variety, that if it is better than expected, you've got a lot of resistance in around 215, 219. So that would really need to clear for you to want to get involved. And if it does move lower, just be aware obviously of the support around 179s. Zoom is an interesting chart. I'm sure there are people that still keep an eye on this. Obviously the run that it had in 2020 was remarkable, but also the move lower from 2020 was maybe more remarkable. I don't know, but this is the weekly chart. So here is going back to that sort of IPO low, which is now not far off the all-time low that we got back in October. However, I don't want to say significantly, but we are above this level, which can be quite important for when looking to find a low. This is what it looks like on that daily chart. You can see we're above the previous lows of the year and the lows from 2020. I mean, listen, if you were to buy now, of course, and it goes all the way up, it's fantastic, great. I'll just be a little bit careful. One, you've got the earnings report coming out after the close tonight, and even if it is really, really good, you've got a lot of sort of resistance into it. I wouldn't really feel comfortable calling a low on this unless we can trade above mid 70s. So yeah, just be a little bit cautious on that one. What else have we got? Neo, just have a quick look at as well, which is up pre-market. That is another one where there's been a couple of, and I remember sort of going through this in the summer. It had a really nice run higher into some key resistance, didn't quite close above it. I remember saying that was important. I don't think many people saw it going all the way down to sevens, but that's where we are now. For those that are trying to, look for it to go high. Hello. Let me know if you can hear me, if you can see the chart. I have absolutely no idea what happened there. What did it show for all of you? Did it just say the meeting was ended? That's what it showed for me. But I'm back. So we'll continue where we are. Ben, can you hear me okay?
That was fun.
Well, it just kicked us out. And for people at home, it said the host has ended the meeting. I promise you I didn't, but we're back. And we're talking about Neo. So I'll continue where I was.
Yeah. Don't say anything nasty about Neo.
I know that. Well, that's it, isn't it? Someone's obviously listening in. But yeah, the key support around sevens is one to keep an eye on. If that doesn't hold because of poor news or whatever, just be aware 576 would take us back to the level that broke higher in June. So that's a really key area. I think there would have been a few people potentially waiting for that to potentially see a low. However, if it gets above 948, I think people will be a little bit happier about that. Anyway, let's crack on and talk about the house view. I think we have lost in a couple of those Q&As. However, I can kind of remember. But if you can all pop in those questions again, it'd be greatly appreciated. And while we collate those, let's have a look at the house view, Ben.
Yeah, so no real change, right? I mean, we've obviously had a bit of a sort of bonkers rally the last sort of 3 weeks or so. A lot of FOMO in there, a lot of people sort of trying to play catch up. So I would fully expect us to take a little bit of a breather. I guess I draw the analogy a little bit with last year, right, where Christmas came early in November then as well. We had a huge November, a bit of a pullback, a bit of a breather in December, and then we just started where we left off in November, in January, and pushed on. So it feels a little bit like that, but fundamentally, I'm very comfortable with sort of markets here. As I say, that sort of short-term oil and bond yield advice easing, the technicals really helping you out right now. And as we sort of cycle into next year, I still think we're going to get slower global economy. It's going to bring inflation down. I think as long as that sort of soft landing is still on the cards, markets are just going to keep looking forward to the Fed, the ECB, the Bank of England, all cutting interest rates in the middle of the year. And that really driving that rotation into slightly riskier, slightly cheaper, slightly more non-US assets, at least for stocks. Probably undermines the dollar a little bit. Maybe helps commodities a little bit more than they've done this year. But overall, I think 2024 is looking like a decent year.
Yeah, I think so. I think so. Fingers are crossed anyway. But we've also got to be aware things can change very quickly. And that actually brings us on to the Q&A. There are a few charts that we're going to have a look at: Nordex, Caterpillar, Garmin, SNA, and we'll also look at the Japanese yen against the US dollar. But question for us to begin with, you're going to have to put on your devil's advocate hat here, Ben. What could turn a bull into a bear now?
Inflation, right? If the inflation numbers don't come down, then the Fed's not going to cut interest rates. Then we're probably going to have a harder economic landing. Then earnings going to be weaker. I think that could really puncture the the bullish outlook for next year. So I've said it before. It all comes back to inflation one way or another. We've had a bit of it was a very nice headline number. Core was a little bit stickier. If for whatever reason those numbers don't come down, maybe OPEC does something dramatic this weekend, oil prices go back over 100, maybe labor markets don't cool off in the US, and there's a lot of potentials out there. But right now, I think enough is going on, enough things are cooling to bring inflation down. But that, I guess, would be the big worry that would really derail the outlook.
Yeah. Let's have a look at some of the charts. And by the way, if anyone wants me to copy and paste a couple of 2024 outlooks from different banks, I've got all the links for that. So people want that, I'll copy that into the chat. But let's have a quick look then at Nordex just to begin with. And when this was first posted in the chat, I had a quick look, which will show up. You can see the analysis here. So first thing I would say for anyone looking at this chart, again, there's a really nice trend line that starts from, well, not too far off from where we are now, this time a year ago, from October last year. And you can see it's really nicely well respected all throughout October this year, and then the 1st of November. So the market is sort of showing its hand, in my opinion, that it cares about that. So if you were bullish, you don't necessarily want to see it break below that, and then 8.9 as well. That seems to be a very, very important support level and guide for sentiment. Obviously, if you're bearish, you may well be waiting for that. To the upside, the ultimate important level that I would focus on, or it could well be targets for people as well if they're long, is around 13.3. So then we can also get a circle for this area, for this to be the important support point. What happens in between all of that will probably be a little bit of noise. You can see already it's really struggled for direction from just going back to the middle of August. What maybe excites me a little bit more would be, and I'm just going to bring in a bit of a parallel channel for some sort of flag. If we are to get a break of that to the upside, that's when I would maybe get a little bit more excited about a potential move, which could happen to the upside, something where you wait to then target up to 13.3. Where it is right now, it's in a bit of a messy, choppy range. And for those that are looking at it, I think you've got to have a bit of patience. Unfortunately, for some stocks, it is just like that, because you could also just say from where we are now, we're exactly where we were back in April, spikes here and there, but the real move would happen in theory either below 8.9 or above 13.3. Hopefully that makes sense there, Tam. Next up for us then, Caterpillar, which for many people, I don't know if it still is, used to be a bellwether for other stocks within the Dow. It used to have a high weighting, and when their earnings came out, a lot of people would say, okay, well, other stocks are going to be like this, X, Y, Z. I'm not sure if that's still the case. So just looking at this, you can see I haven't got any analysis on it, but still we can do something here. Had a good last week, immediately drawn towards this area 257. It's also mark up the lows that we had not far off that area. Overall, let's put this on the daily chart now. You can see, I think investors will be very happy with the last sort of couple of weeks of work that we've had in. But, and I was going to bring in my trusty rectangle. This is the area here. Really would need to get above 257. If that happens, I think you get excited about all-time highs again. But if you think about people that would have got long into this area of support here, where is the place where they would, talking short, medium term here, where they would take profit? It is probably going to be 257. So I'd, again, be a little bit careful if you're looking to say buy now, because you're buying into an area where people might take profit, people might sell. Above that, things do start to change, and then you zoom out, and it's obviously been on an incredible run. But it's not the first time it's had price action like this. After making a high in 2017, sort of drifted lower. After making a high in 2021, drifted lower. Again, this year, twice that's already happened. However, if you can break any of those previous highs, there seems to be a little bit of more of a run higher there. Anything on Caterpillar, Ben?
Yeah, you're right. I mean, it's historically basically just a proxy for the real economy, right? When you think about the things that they make, right? Diggers and generators and all the stuff that you use to sort of make or build or dig stuff. Because of that, the valuation's actually been derating, right? It's on like 12 times, but that's way below average, which is basically the market telling you, there's an economic slowdown coming. But they've continued just to post sort of great growth. And as we've said before, a lot of their end markets, whether it's sort of oil and gas or mining or whatever else, have been seeing pretty good price rises for them, and they've got some pricing power and everything else. So they're in a decent spot, but it's basically a proxy for the global economy, which is why it's basically the cheapest it's been in 4 or 5 years at this point.
Interesting. Right. Garmin, SNA, and Chevron to bring us up to date. Let's have a quick look then at Garmin, which is just loading up for us now. Pre-market flat, finished Friday pretty flat as well. But investors won't be too worried, especially for those that got in on those sort of October lows. Really nice price action, you have to say, over the last 3 weeks. And this is what can happen when obviously you break a key resistance level. And actually, this is a zoom back. Let's put us back into, just so happens it's October now, that where you see on the right-hand side. And this is why I mentioned, it's got to be patient. Wait for that close before getting in, because there's plenty of times where people would have bought in May. They would have bought in July, they'd have bought in September or October, and it's just not quite going yet. And you can see what happens. Obviously, there's been no retracement yet. So this is more for the sort of the breakout trader. But a lovely break above that 106. In terms of targets that I think old people ultimately be looking at, these would be the ones where I think you can have some short-term reactions in and there we go. That's it. Let's mark that up. Not far from where we're trading now, but lovely push higher. And when you see it on the daily chart, that's what happens when you finally get the break, and it's pushed on quite nicely. Again, just be a little bit careful for those that are looking at this on the shorter term. You're going back here to the high from March last year, and that marked, unlikely it's going to happen again. That marked a 37% move lower. Just because it's happened before doesn't mean it will guarantee it will, but other traders will be looking at that. And again, if you did get in, on any of these lows, what a great place for the trader, you would say, to take some profit. Just to say, you managed to catch the absolute low, which people always say they do, but very rarely do. That's a 20% move. You can't be too disappointed in that, I would say. But yeah, big level nonetheless. Ben, anything on Garmin for you?
It's been a hell of a run. I mean, I was just looking at the value, 21 times earnings, a bit above average, but business seems to be pretty good. They just hiked guidance for the year. They beat estimates. The autos business, the fitness business, that all seems to be working well for them right now. It's a little bit pricey, but if they keep the momentum going, probably justifies it.
Yeah. 106 seems to be the important level to the downside. I think if you're an investor, you wouldn't want to see price back below there again, especially considering how long it struggled to get above it. But at the moment, it's above it. So you've got to be happy. SNA to come, and then we'll have a look at Chevron. SNA, here we go. Just have a quick look at this. Let's just zoom out a little bit to show a bit of a clearer picture. It was immediately drawn to 279. Reason being, as you'll see here, it was the support area that gets held pretty well until July. We're sort of revisiting that now. So again, if you think of anyone that would have got long on what was a very key level, we're at 249. It's probably where they would potentially look to take some profit. So if you're riding it, if you did get in there and you're more of a short-term trader, short-term thinker, it might be that some people consider to take some profit there, or they wait to see how we react. In the short term, you wouldn't really want to see price below 271, as that would be the change of a trend. But it's going into a key level. Obviously, you want it to break, but again, it's been a nice trade to the upside there. I would say Chevron, which has had a bit of a mixed fortune over the last couple of years. I mean, there's, weren't too long ago, we were talking about it being up at these highs, 1, 2, 3 times. It really tried to push on and it just couldn't quite do that. And then since then, we, have drifted lower. A few weeks ago, it came into a big move. What I would immediately, again, be drawn towards here, let's just zoom out and we're going back to 2014. Look at this. Resistance once, resistance twice, finally breaks above it last year. That turns to support. So that would be the area I'm first sort of drawn towards here for Chevron. It's an area the market clearly cares about. I think you would have certainly people that are short, an area where they would consider taking profit. People that want to buy the dip, they'd be attracted towards that. It may well be we never get down to there, albeit we're not far away. So if we are to see a bit of recovery, what would you want to see from a bullish perspective? Price get above 149. Look at this. Support breaks through. Okay, what happens above there? Sentiment starts changing. So there's 2 key levels for me for Chevron: 149 and 134. Anything to add on Chevron, Ben?
Well, just that if you're a Chevron stockholder, you'd probably want, I've said before that anything like these oil prices are great for the oil majors, right? They continue to, pardon the pump out just huge cash flows and dividends and buybacks and everything else. But you'd still want OPEC to draw a little bit of a line in the sand here and keep Brent above sort of $80 to just make everyone comfortable that those cash flows are going to continue. And those payouts to Shell is going to keep coming. The other thing to bear in mind is they have this big Pioneer deal, which they've got to integrate. Oh, sorry, a Hess deal that they have to integrate, which is probably not too difficult for them, but, does muddy the water, a little bit.
Yeah. Those arrows there, the squiggly lines, would be what a bull might want to see from where we're trading now, either above 149 for it to be a base to push on, or us to find support at 134. Of course, both of those are not guaranteed to happen, but just the way people might be thinking. Hopefully you all found that useful. Sorry for the break in between. I have absolutely no idea what happened, but we all managed to get back in, which was the main thing. Ben, as usual, thank you for joining us. Yeah, hope everyone has a good rest of their week.
Tread safe.
Take care, everyone.